All right, good morning, guys. Today is July 11th. I haven't been feeling well the last couple of days, so bear with me. Sometimes just have some irritating cough. But anyway, as usual, we'll be going over analysis for US 30, gold, and EU. So for US 30, I'm still in a US 30 buy that I entered last Thursday at around the daily bullish high with the 4-hour bullish high. Now you can see for this trade, I did mention like for Fridays, instead of trading on a Friday, just look for trades on, let me see, what time did I, 33,822. So I entered this trade around here, 822, somewhere around there. Now, I mentioned just avoid trading on Fridays, and the opposite of that, not that you can't trade on Fridays, but look for Friday entries on Thursday afternoon, so that you survive being faked out. You survive being faked out by moves. Excuse me. So for me, when I entered this trade, I actually did a 500 pip stop loss and TP. So I knew with that, like I literally knew US 30 was gonna go up, but I wanted to avoid the fake out that actually happened on Friday. So you can see on Friday, I entered this trade on Thursday. So on Friday, trade went up like halfway to my TP. So normally I know I use 200 pips TP and stop loss for US 30, but I knew that Friday I can get stopped out before my trade hits TP. So what I did, instead of using 200, I used 500 pips. And because I knew that this trade might go on for a week, for this trade, I'm actually risking, I think it's 3%. So instead of just risking the regular 1% or 0.5 that I risk, knowing that I might lose some trading days, I went ahead and risked, I think it's 2% actually for this trade. So you can see I avoided this whole fake out to the downside, and US 30 is ideally halfway towards my TP right now. So right now that's the only buy, and I'm in that buy. Let me turn off some of these indicators. I'm in that buy based off of this daily bullish high and the 4-hour bullish high and low right here. I had mentioned previously that the other red flag with this was this daily bearish high. So if we did not have this daily bearish high right here, I would have used like a 200 pip stop loss and TP. The issue comes with, and I know I did like a session with one of the members here yesterday. I love daily order blocks, right? Because they rarely come up. The only red flag is that if you have two opposing daily order blocks, because they will use that to manipulate price to the downside or to the upside. So you see here, we had a daily bullish and a daily bearish order block. So look at exactly what they did. They brought price towards the daily bearish order block in order to trap both buyers and sellers, because sellers who are looking at the daily bearish OB, they thought that right price is coming here and they could have hoped into sales. On the other hand, they knew there were people like me who are waiting or who had buys based off of the daily bullish order block, and then they went ahead and stopped out people who had like a slim TP and stop loss. So sometimes you might know for a fact that an instrument is going to trend up or down like within the next week or two, and you might be confused. Maybe or there's a probability that the regular stop loss you use might get stopped out or faked out. So in that instance, you can either double your TP or stop loss or 1.5 times it. So right now, if you ask me, where is US 30 headed to? So I can go ahead and turn on the Zonzi indicator. So let me see where the buyers and sellers are sitting. So I can see we're headed towards sellers between 34,130 all the way to the upside. Now, for me, I'm not interested in these zones by themselves, right? So I want to see what order block can sellers use to bring price down. So if I look up, I see 4-hour bearish low at around 34,220. I see an hourly bearish high and low around 34,237. So, and that's ideally where my TP is. So if you ask me, this is what I see happening for US 30. I see US 30 coming at the very least to the 4-hour bearish low. Now look at the opposite chart, what do you see? The 4-hour bearish low is around 34,227. I'm sorry, 225. Look at 225. We have this trend line on the hourly time frame. So that's one area of rejection for US 30. Now we have a heavy zone between the 4-hour bearish high is 34,371. 4-hour bearish low is 34,225. So that's around a 150 pip zone. We normally know with this order blocks, normally you have price reaction at least like 50% of that OB. So I mean, definitely US 30 can come to the 4-hour bearish low and drop down heavy from here. But what's the probabilities that we know? The probabilities we know is that a lot of price reaction of an order block is normally at least 50% of that order block. Now, 50% of that order block lines up with the hourly bearish high and low, which is around where my TP is. So I expect US 30 to pump to about 34,300 before any rejection back down. So that's my expectation for US 30. Let me turn on the zones because I don't like having them on. Any questions regarding US 30? All right, so gold, gold, same thing. Gold, gold is, for me, gold is in a no man's land. I wouldn't be trading gold until my expectation for gold last week, if you do remember, I expected gold to go to either of these two trend lines. So between 1940 or 1960. So for me, that's my ideal sell on gold. Now again, right, looking at this, let me go over something real quick before I forget. I know I did mention that I found a new strategy we can use using the crosses indicator. So if you look at the crosses indicator, and I don't know if if that person is in here today, Danik, let me know if that's how you pronounce your name. But so with a 15-minute time frame, let me go ahead and do this. So you can see again here, just by using our strategies, the first 3 to 4 trades on the 15-minute time frame, right? This buys. So there was no reason for anybody to have taken this sell and this sell, because I normally say stick to the first 3 to 4 trades, including the original cross, and you should be good. So actually for me, I'm up 4% just by trading this 4 trades on US 30, because this buy, actually for me, the second buy hit stop loss because of slippage. So this trade for me actually hit because you can see how close it came. So for me, this one of the buys hit stop loss because of slippage, but I caught this buy yesterday, made 1%. Caught this buy right here. This is the one that hit stop loss because of slippage, either that one or that one. So made 1%, lost 1%, made 1%, made 1%. For the last 2 buys, I actually went in with like a 2% risk. But anyway, just by trading this crosses, I'm up 4%. Now, when I was doing one-on-one with one of our members yesterday, I mentioned, so this requirements that I normally give you, like literally when I was having this indicator developed, I never knew these requirements, right? So these requirements, I developed them from backtesting a lot, like every time frame. Now, the major enemies to any of my indicators are consolidating market, low volatility markets. So that's why I normally say avoid trading between 3 p.m. to 11 p.m. or 10 p.m. Eastern Standard Time, because by then you have the Asian session, or end of New York to mid-Asia session, where there's low volatility in the market and also a lot of consolidation. So for any of my strategies or indicators, avoid trading during that period. Also avoid trading during consolidating markets. So when I was backtesting, so that's why I prefer using this indicator at least on the 15-minute time frame, because if we went on the 5-minute time frame, you'll see that this EMAs are crossing right frequently. So you see there, like every hour or so, they're crossing and crossing. Now, it's not a bad thing, because worst case, you're going to get trapped or locked into positions, but you really don't want that. Now, when I was doing this one-on-one yesterday, I went to the hourly time frame. So look at this on the hourly time frame. So let's just assume, right, the same requirements, and look at the hourly time frame. So on the hourly time frame, let me go ahead and delete all of this. So we have a clean chart. Actually, I can do remove 13 drawings. Okay, so on the hourly time frame, I was just looking at it and just visually backtesting this. Now, wait, when I deleted that, it actually deleted that drawing on the chart. I may just have to manually delete this. Just bear with me real quick. And I'm actually looking for an entry, a buy on the 1 hour time frame. Now, if you look on the hourly time frame, let's just backtest this visually. Now, if you entered this trade, short position right here for the sell, and for this one, if you're going to do it on the hourly time frame, I recommend using a 200 pip TP and stop loss for US 30. If you did the first, now here's what I found in short. On the hourly time frame, don't do the first 3 to 4 trades. Just do the first cross. So either the golden cross or the death cross. Now in the indicator, you have these options to turn off the secondary buy or sell. So what I want us to focus on, let's focus on the original cross. So either a death cross or a golden cross. And then here's what I saw with these trades. With these trades, you can easily risk 2 to 3%. So let's assume we are risking 3%. So let's go back, right? I'm not going to try and make up anything. So let's just try and go back. I don't know. So let's start here with this death cross right here. Or let's even start with this buy right here, because I can see it would hit stop loss. So for this particular buy right here, let's do this. US 30, that would have hit stop loss, right? So minus 3%, see right there. So that would have been minus 3%. Let's just assume we are risking 3% for these trades. So minus 3% right there. Okay. And then you have that sell right here. So for this sell, you go ahead. Guess what? You end the day, you come back to break even, right? So now you're at break even, risking still 3%, and you're only taking the original cross. So you're at break even as much as you had lost. And this is why I love this indicator, because it can easily bring you back to break even. That's why when I'm trading with this indicator, I'm not afraid of hitting stop loss for a trade. So for this particular one, we go to the next one. For this one, we would have been down another minus 3% right there. And you can see this would have been a fake out. Then we take that short, which is right here, right there. This short would have been down another minus 3%, right? So at that point, you're down 6%. That's fine. Take the next trade. So the key to this is taking every trade. Now, right, I do have signals that come into a certain Telegram that have this. So let me delete the ones that hit stop loss so that we can see. So we are down 6% as of that point. So for this buy right here, at that point, you're down 9%. So that's fine. Keep going. Then you catch this buy. This is the buy that hit stop loss. Then you have this buy right here. So, and this is what I mean about consolidating markets. So technically, if I was trading this one, I would have avoided all of this, but I'm just counting for you guys to show you the result if you're trading literally every one of these trades on the hourly time frame. Now, it doesn't have to be 3%. It can be 2%. So at this point, you're down 9%. Okay. So you go ahead. This sell right here, this sell I can tell would have hit TP right here. So this sell would have hit TP, but this buy right here would have hit stop loss. So these two sell and buys cancel out. So again, you're still down 9%. I think 9% it was. Now with this sell, you're brought back up 6% because this sell would have given you 3%. So now you're down 3%. I'm sorry, 6%. and then you keep going. And this is just right. I didn't want to make any statistics up, so I just wanted to show you guys how you can even recover from drawdown. So again, with this one, you're down 9% again. This sell would have hit TP, which again, these two cancel out. So again, you're still down 6%. Then you get this buy right here. And I'm talking, this is the hourly time frame. This buy again would have given you back 3%. So at this point, you're only down 3%. Then you wait for the next cross. So this next cross, you have a sell and you have a buy. So this again, one would have hit TP, one would have hit stop loss. So again, you're still down 3%. Then you take the next sell that's right here. And guess what? This sell would have taken you back to break even. So you'd have gone from being down 9% to being back at break even in a span of, I don't know how. So for this trade right here, this was Thursday, 22nd June to when did we start backtesting? I think here, maybe. No, I think it was here. So in a span of 22nd June, so in a span of about a month, because this is the hourly time frame. So in a span of about a month, you'd have gotten your free retry. And keep in mind, we have like other indicators out there that we use. Okay, now this buy right here, this buy I can tell would have hit TP, this sell would have hit stop loss. So these two cancel out. So you're already at break even. You've got your free retry for whatever account you're using. So this buy and this sell would have canceled out. So you're still at break even. This buy and this sell again would have canceled out. You're still at break even. Then you get this buy that doesn't have a sell that's canceling out. You take that buy. Right there, 200 pips TP and stop loss, you're up 3%. This sell, you're up 3%. So you're up 6% in your free retry, just in 1-2 trades. So this is what I was mentioning to you guys on the hourly time frame, and it doesn't have to be 3%, because again, remember, I never recommend anybody to risk anything more than 1% per trade. But this indicator has such a high win rate such that you can easily risk 2% or even 3%. So for me right here on this crosses indicator, what do we have? What do you guys see developing? So we had a death cross right here, which would have given you an easy 3% or 2% or whatever percentage you want to use. But right here, you can see the 9 EMA is coming towards the 200 EMA. So right here, we are actually about to have a golden cross on the hourly time frame. So this is the next trade I'm waiting for on US 30. If it does show up during the live session, I will take it and I'll use a 1% risk. I may not use a 1% risk, but the trade that I'll send to the group, or if I ask you guys to take it with a 1% risk. Does anybody have any questions regarding the new strategy for using it on the 1 hour time frame? Okay, so remember, again, 1 hour time frame, do 200 pips TP and stop loss, because if you do 100 pips TP and stop loss on the hourly time frame, you'll see that your results will be skewed because you can easily get faked out. So for example, this buy right here, if we had done 100 pips TP and stop loss for US 30, you can see we would have lost this trade for no reason, because we would have literally gotten faked out and then price would have gone straight into TP. So this is what I mentioned. On the hourly time frame, use like a 200 pips TP and stop loss. On 15-minute time frame, yeah, you can use 100 pips TP and stop loss. But for me on US 30, for most trades, I just use 200 just to be safe. So yeah, so remember, the kryptonite for a bunch of my trades is consolidating markets. Now, again, the beauty for this indicator is that if you take even the opposing signal, worst case, you'll come back to break even. And inside the indicator itself, of course, you do have ability to take off signals where price is squeezing or consolidating. The worst part about this, which is a reason why I don't use it, sometimes the squeeze filter is going to take off a valid signal. So for example, in this instance, and I'm not saying that's what happened here, but I've seen instances here where you can see this buy would have hit, let's see, this buy would have hit long position. This buy would have actually hit TP. This sell, is it the sell? I think maybe the sell then is the one that would have hit stop loss. Sell, yeah. the sell would have hit stop loss, right? So I've seen instances where it will take off this buy, but won't take off this sell. So instead of ending up break even, you would end up down 3% or 2% or of whatever, depending on whatever you're using. So which is why I normally say just trade pretty much every signal. On the hourly time frame, you can afford to set an alert on your time frame such that you get an alert when they're forming a golden cross or death cross. Now, the reason I'm not I don't see a need to take the secondary buys or sells, not that they can't hit, but if you look, for example, here, if you took the golden cross and you took the secondary cross would have hit stop loss, right? Because the buy would have been here and you can see price would have come back down. So, and this is because the higher the time frame you go, you don't want to take the secondary buys or sells because these are 1 hour time frame candles as opposed to the 15-minute time frame where you have more candles that can have the ability to continue a trend. So for example, even on the 4-hour, I'm pretty sure there's a strategy to be developed on the 4-hour, but you can see on the 4-hour, the higher the time frame you go, as much as you can even trade the original cross, you can see the results start getting skewed. So for example, if you took this death cross right here, you would have hit stop loss. If you took this golden cross right here, again, you would have ideally been on your way back to break even. But you don't want to, maybe you don't want to start trading the 4-hour time frames because you can easily get wicked out. So you can instead of ending the day at break even, your buy can hit stop loss and your sell can hit stop loss. Maybe the strategy to using it on the 4-hour time frame is instead of using a 200 pip TP and stop loss, maybe use a 500 pip TP and stop loss. But for me, for right now, I'll forward test the hourly time frame before even going forward to another high level time frame. So for me, as of right now, I'm waiting for a buy on the crosses indicator on the 1-hour time frame. If I do get that buy, I will send it to the group with a 1% risk. Now, what happens if US 30 starts consolidating and gives a death cross? So if US 30 gives me a death cross, guess what I'll do? I'll go ahead and enter the sell on US 30 based off of the same parameters, 200 pips TP and stop loss, so that I can lock those two positions. Because eventually, what do we know about consolidation or ranging markets? Eventually, there will be a breakout. So if I get so it is possible that US 30 might start ranging here. So if I get a golden cross, I'll take it. If I get a death cross, I'll take it. But eventually there will be that either golden cross or death cross that will go straight into TP. So eventually either way, you'll win this trade one way or the other. So you might be locked into 2 or 3 positions, but eventually you'll get a trade that doesn't have a locking opposite that will go straight into TP. So that's just one thing you want to be cautious of for taking this. And I think I'll start as challenge to take this take this what is it called? Take this new strategy on the hourly time frame. Does anybody have any questions regarding this? Okay, perfect. So that's one thing I forgot to mention. So for gold, let's see what we can see on gold. So I did mention for gold, I'm not looking to trade it because gold, as you can see, is in no man's land. If we turn on the zones indicator, you can see we have both buyers and sellers next to each other. So that doesn't really tell us a lot. So let's see what order blocks we have around. We have a 4-hour bearish high and low where price currently is. We also have a 4-hour bullish high and low that's about they're about 100 pips away from each other. So right now, I hate trading in an area where order blocks are next to each other. Now, we do have a daily bearish high and low here. So if we take off all the noise, so let's take off all the noise. So what we know is that we have 2 opposing 4-hour order blocks. So let's take them off from the charts and see what really matters. We also have 2 hourly so an hourly bearish, an hourly bullish order block, they're right next to each other. So again, take off all that noise and the confusion. 15-minute and 30-minute are pretty much close to each other as well. So let's take those off. What now, we are remaining with what really matters on that chart. And what that is the daily bearish high and daily bearish low. Daily bearish high is at 1960, daily bearish low is at 1940. And I did mention last week I was expecting gold to come to 1940 and 1960. So for me, the ideal sell area, gold is in my ideal sell area. So right now, what I can do on gold is box in these zones. So since this is a 200 pip zone, I would want to, how am I going to enter the cells? So for those of you guys who are with me when I first started live streaming, we used to break down an order block. We used to box it in, so a high and a low. And then we used to do a filler sell. So in this case, this is a sell for gold. The first sell on gold would have been around the bottom of that order block. And then for gold, for me personally on gold, nowadays I do 100 pip TP and stop loss. I know I used to do 50, but I don't do it as much anymore. So since this is a filler trade is ideally you're not looking to make profit on a filler trade. So a filler trade, the stop loss should be above the high of that order block, depending on the direction you're trading. So since this is a sell, the filler trade, the sell, the stop loss would be above the daily bearish high. And then this is a 41. So this is like a 200 pip move. So that's fine, which is fine because you're not looking to make money from a filler trade. So what you're expecting from a filler trade is to confirm the direction you're anticipating gold to go to, or whatever instrument to go to, will work. So what you want to see in a filler trade is that you want to see your trade get filled, and then you don't want to see an aggressive move against your entry. So you want to see your trade get filled, have like little to no drawdown, and then price starts going down. Now, if this starts happening, this is good because it's telling you this daily bearish order block that you're trading, it definitely has some sell momentum. So now what that then tells you is that get ready to set your second order. So at that point, you then set your next sell order around halfway through the order block. So the next sell on gold, 1950. Now, this is the first trade where you can start looking to make money from it. So for this trade, again, remember your stop loss is above, should be above that daily bearish high in order to avoid getting stopped out or getting faked out. So the daily bearish, daily bearish high is around 1960. And trust me, with this daily order blocks, there's a lot of manipulation. You can clearly see it on US 30 here, how we had this daily bullish high. They literally manipulated US 30 from 33,750 down to 33,588. They manipulated US 30 by about 150 pips, and that's a heavy move on US 30. So for gold, you can expect them to manipulate price up like around to 1965. So your stop loss may be 1969, 70 area. Now for this one, this is the first trade you can look to start making money from. Now, right, again, always have at least a 1:1 risk to reward. So I don't know what the 1:1 here would be. So maybe somewhere around there. Your TP may be around 1932. And then your last trade, again, what do you want to see? If gold comes back up, you don't want to enter a trade at 1940 because remember, the filler trade actually told you that, hey, 1940, this is the price action I gave you. The daily bearish low is giving you a sell entry. So when price comes back up here, you don't want to enter your first trade at 1940. Your first trade will be here at 1950. Same thing. When your order gets filled here, you don't want to see gold going heavily against you. If you see this and you have a pending sell order at 1960, go ahead and delete that. What you want to see is getting filled into this trade and then having little to no drawdown because this is an order block. If you're trading order blocks, more times than not, you'll have 0 to no drawdown. And then straight into TP. Now, if you hit TP on this trade, guess what? Just wait again for gold at 1960. If gold comes back up, don't enter at 1940 because you already entered using a filler trade. Don't enter at 1950 because 1950 already gave you your profits. Your next trade will be here. And for me, the third trade is normally high risk trade. So I go with like a high risk for this trade. So for this trade, this would be your entry right here, short position. And so for this particular one, right, you can have a smaller TP and stop loss on this one because there's really nothing above here to show you where to put your stop loss above or below. So for here, maybe you can have a 50 pips TP and stop loss, and maybe what is that? 50 pips TP and stop loss, and maybe 100 pips 50 pips TP, I'm sorry, 50 pips stop loss, 100 pips TP. So what you want to see here again, when price comes back above here, you want to see yourself get filled by an order and then straight into TP. So that's how I'll be looking to trade gold at these three zones right there. Any questions regarding gold? Okay. Last but not least, I know we haven't traded EU in a minute. So for EU, if we see what we have on EU, we have an hourly bullish order block right here, 30 minutes, 15 minutes. So to me, these two, even indirectly, even without taking them off using the indicator, these 30 minutes cancel out because they are so close to each other. So even the 15-minute, again, 15, I don't trade 15 minutes by themselves. So looking back, and then you have the 4-hour bearish high and low, ideally close to each other. So even for me, these two cancel out. So the only order block that's left right here is the hourly bullish order block. The opposing bearish order block is so far away. So these two, if I were to take them, if I was to take off the order blocks from the charts, I would take off the 4-hour order blocks, the 30-minute order blocks, and the 15-minute order blocks. That would leave me with the hourly bullish high and low, and the hourly bearish order block right here. And then what I want to see where are the sellers, where the buyers and the sellers sitting. So if I turn that on, you can see we're in a zone that has a lot of buyers. Okay, that by itself does not tell me too much. So if I know we have buyers sitting here, what order block can these buyers use to push price up? They have the hourly bullish order block right here. So in any case, for me, I'm bullish on EU right now. As much as we broke this trend line to the downside, and technically I can see a sell right here, because ideally if you break a trend line, you normally want to wait for the either retest or retest and closure below, or after the candle that breaks the trend line, you want the next candle to also close below. So I can see a sell for EU right here, but looking at the order blocks we have right here, we really do not have an order block to push price down for right now. But if EU does come to the 4-hour bearish high and low right here around 1.0943, yes, I can see EU going down, but however, we have a 4-hour bullish order block right here. So for me right now, EU is just giving me too much conflicting information. Now I can check on the, what is it, on the breakout scanner and see, maybe the breakout scanner can tell me something about EU. So I can see EU is breaking down for a sell. So breakout scanner is telling me sell. Price action based off of this trend line is telling me sell. Order blocks are telling me to buy. So then you go to our other indicators. So I normally don't use the crosses indicator for FX pairs, because again, remember the kryptonite for my indicators is ranging markets, and we know a bunch of FX pairs normally consolidate. Now, this is actually nice, what I'm seeing on EU based off of the crosses indicator. So we are approaching a death cross on EU. based off of the crosses indicator on the 15-minute time frame. Now, since we're approaching the death cross, I come in here and ask myself, if we have a death cross, when was the last golden cross? Okay, so today is Tuesday, 11th July. The last golden cross was 7th July. So 3 days ago, about 3 days ago. So that's not bad, right? Because we haven't had like consolidation or another death cross within like a day. So red flags are when death crosses and golden crosses are within like 24 hours of each other. So that's a red flag, because that will tell you this instrument has been consolidating during the last day. So the crosses indicator, which has like a 90 to 98% win rate, is telling me, hey, I have a death cross coming in for you for EU. So it's telling me EU has a high probability of selling. So now, and this is how I normally trade nowadays, every indicator that I own has to convince me either to buy or to sell. So I normally look through all of them and see, be objective. Is it objective? Yeah. Be objective and be like, don't try to force. If you're seeing a buy, don't try to force a buy using one indicator or another. Listen to what each indicator is telling you. So for me here, the technical analysis based off of this um, break and retest of a trend line on the hourly time frame on EU is telling me to sell. The order blocks are telling me to buy. Okay, so right there I have two conflicting information. The breakout scanner is telling me to sell. The breakout scanner has like a 70 to 80% win rate. The crosses indicator, which has like a 90 to 98% win rate, if you apply it with all the strategies, is telling us to sell. Okay, what other indicator do we have left? The reversal indicator. Now, the reversal indicator, I did mention that you can use it to give you the direction of a market. So right now, since I'm not trying to force any trade on the reversal indicator, I'll go ahead, come in here, turn on both buys and sells, because I'm not looking either for sell only or buy only, because right here, right, I can see both entries. So I'll start from the 5-minute and literally, right, if you're using the reversal indicator, literally use it how we use it. So these are the requirements for the reversal indicator. So even though your price is not reversing, right, all the inputs here remain the same. Whether it's the inputs in the indicator itself or the inputs, the manual markups you do on the charts, those do not change. So right now, I don't see really any reversal. On the 5-minute, a reversal, a trend has to go 50 pips. So right here, 105, so this is like 30 pips. So on the 5-minute, I don't see any entry. On the 15-minute, what I'm looking for a nice reversal. So on the 15-minute, I saw a sell here. I don't see any buy right now on the 15-minute. Now, the higher the time frame I go, I want to change the delay to 0. So on 30 minutes and above, you want this to be 0. So right now, I neither see a buy or a sell on the reversal indicator. So at most, what the reversal indicator is telling me, I gave you an entry on the 30-minute time frame, but the entry I gave you was like 4 hours ago. So you're kind of late to the party. So right now, the reversal indicator is telling me I can't really help you to find an entry right now for EU, because I gave you an entry. What was this? 6 hours ago. So the information right now that I have on EU is that the breakout scanner is telling me we are breaking out for a sell. I'm sorry. Breakout scanner is telling me we are breaking out for a sell. Crosses indicator is telling me, wait, I'm about to give you a death cross on EU. So the the crosses indicator is telling me to wait, but it's telling me we are about to sell EU. And then just by all of that, right, it's like a jury, right? Majority of the jury or whatever, whatever it is you want to compare it to. So majority of the indicators are telling me it's a sell for EU. So right now, what I'll wait for on EU, I'll rely on my highly probable indicator, which is this, and I'll wait for that sell on EU. And for me, EU, for FX pairs nowadays, I go for 40 pips TP, 40 pips stop loss. So hopefully that makes sense. So the only two trades I'll take today, just by analyzing is EU sell and US 30 buy on the hourly time frame based off of the crosses indicator. So both the entries that I'm taking today will be based off of the crosses indicator. Now, I know normally US 30 and EU normally move alike for a good amount of times. Um, but both of them, since I'm taking based off of the crosses indicator, for the US 31, again, I'll take with a 1% risk. For EU, I'll take with 1% risk. Or let me rephrase. I'll send the trades with a 1% risk, because for me, for this US 30 trade, I'll probably go in with a 3% risk. But for you guys, especially the beginners, never risk anything more than 1% for any trade you ever enter, unless you know what you're doing. So does that make sense? Any questions from anyone? Okay. I don't think I have anything. I know I haven't really sent out a trade this month because I was on vacation and I've been sick the last few days. So hopefully today we get those trades and I will send them to you guys in the Discord. I'll send them the US 30. What are we looking for? US 30, yeah. US 30 trade, I'll send it in here, and the EU trade, I'll send it in here. And then hopefully we can be up like a good 2%. So keep in mind, you mostly want to focus on quality entries. So if you look at June, we literally had like a 3.5 return, and that's only the trades that I took on the live session or trades that I send in the Discord. Personally, I made 15% last month. But the trades, and you can see, again, I was on vacation for a good amount of June, and some of the days we didn't trade. So we made 3.5%, and this is the trades I sent. So 1, 2, 3, 4, 5, 6, 7, 8. Eight days out of the month, we made a nice 3.5% compared to the previous month, right? Where we were trading, I was sending trades every day and we were risking like 0.5%. So you can see the difference between May and June. In June, I started risking 1% mostly for all my trades because our strategies have a high win rate. So there's really no need to be too conservative with some of the risk. Now, since I upped the risk that I'm taking or that I'm sending out for trades, nowadays I only take A+ trades. I don't look to be taking 4 trades a day or 2 trades a day. That's why for me, like last week, I was up, what was it? Last week alone, I was up 6% and I only took 4 trades. So the key here is to only look for those particular trades, and literally what I just demoed for you guys. It doesn't have to be my own indicator. I know you guys out there, maybe you guys have other indicators or other groups you trade with, but develop a system where all the indicators or strategies that you are exposed to have to convince you to enter a buy or a sell, right? Like Steven normally says, your goal every week should be not to trade, such that for you to enter in any trade, every strategy that you know of should convince you, hey, this is the reason why you should enter this trade. And if that strategy is not convincing enough, do not enter that trade. There will always be days where you don't have a trade to enter, but there will be days that you have like 4 A+ trades. So don't worry about not trading 3 days a week. That's fine. The one day that everything will align, you'll have like 4 trades that you can easily take 2% each, and you can do like 8% in literally one day. So unless there are any other questions, I will cut off the live session, and then once these trades do line up, I will send them out in the Discord. Any questions? Okay, perfect. If not, then I will see you guys tomorrow. Again, for those of you who have access to my indicators, watch US 30 on the 1 hour time frame. We are about to get, and I can see it right here. We are about to get that golden cross. So for US 30 here, since I'm only interested in buys, I will turn off the sells because I don't want to be confused by any sells. And since we are only trading for this new strategy on the hourly time frame, since we are only trading that original golden cross or original death cross, we're not interested in the secondary buys or sells. So right here, I'm only waiting for that particular one. And when I get it, And you want to wait for I can see possibility for entering this trade early, but you always want to wait for that signal to fire. So you want to wait for that candle to close. So don't worry, even if US 30 pumps up heavily, like literally wait for that. If you have access to these indicators, wait for that signal to fire. But for those of you, of course, who don't have access to the indicators, again, you don't need to subscribe, or you don't need indicators or my indicators to make money with me. I will send this trade out in the Discord even when it does fire. But again, remember, I don't send out every trade. I only send out some trades. So for the people who have access to the indicators, of course, you have an upper hand. Any questions? I'm guessing it's a good thing people don't have questions, because it means hopefully a lot of people are understanding. But if not, I will talk to you guys later. Have a good trading day. All right, see you guys. Bye.